about to reveal the best strategy in terms of win rate. It is so good that even I, with my conservative risk management of 2%, open deals for 4 or even 6% of the balance according to this strategy. So now, let's wait for this transaction to close and proceed to the analysis. Hello fellow traders, in this video we will continue to study the price action and touch upon my favorite topic, which is supply and demand. And this is not the easiest strategy, but having mastered it, you will be able to multiply your win rate on binary options. So do not skip this video and watch it till the end. And today we will figure out what the supply and demand zones are, and I will explain why I apply such an aggressive risk management strategy to these transactions. Of course, I will show you my secret how to find and draw those levels correctly, and of course, I will show you my strategy for that. And at the end of the video, we will analyze my real deals using this strategy. And of course, if this information is going to be useful for you and it's going to be interesting, please do not forget to like up this video and subscribe to this channel. Now, let's get started. So first things first, let's talk about supply and demand zones and why when trading with them, you're going to be trading with the biggest players on the market who is actually controlling the price. So in general, supply and demand zones, those zones are where the price reaches a certain level and then makes aggressive jump up or down. So let's look at the examples. On the left side, we have the example of demand zone. So the price was going down and in a certain level, it jumped up really aggressively, as you can see. And on the right side, we can see the supply example. The price was going up to a certain level and then dropped drastically down. So let's talk about it a bit more. This basically shows us typical picture where usual traders as you and I, we cannot do anything with the price here. Only the big traders can do that, for example, banks. If we're talking about demand, for example, the price was going down to a certain zone, which is the interest zone, where the bank is ready to enter certain deal. So basically, bank is placing their points there and the price is going up because of it. By the way, guys, I wanted to remind you that if you want to study trading with me and my team, you can get my free course in which I talked about a lot of different indicators as well as risk management and, of course, technical analysis so that you can build your own profitable strategy. To get this course and join our little academy, just text me on my Telegram, link to which is going to be in the description box down below. So when you know how to find supply and demand zones, that basically means that you know the price levels on which banks and other institutional traders are interested in entering a deal. So let's look at some examples here. Right now, we see that the price was going down to a certain level and there was a huge rise of the price, basically creating the demand zone. And this is the zone where institutional traders were interested in entering a deal, and that's why they made the price higher. After that, we can see that there was quite a long correction there, right? And when the price went back to the same level, there was a big and high probability that the price is gonna shoot up again, because this is the zone of interest for big traders. And this is why in this case, in this strategy, I use not really standard risk management, because as you know, I'm quite conservative and usually use only 2% of my balance or even less than that. But in this case, with these deals, they have quite high win rate and it's not easy to find them and it's not a lot of them. But when I find them, and if I find them, for most often, I open deals for 4% or even 6%. Let's talk about some real examples. So in this case, I opened the currency pair GBP/GPY, and we see that the price dropped abruptly and really suddenly because before that price was moving quite stably and then dropped, which means that potentially there is on top we have a supply zone, right? and we are marking it in the way that you see on the chart. And now we are waiting for the price to come back to the same level. And of course, it may take a while. So we're looking at price and it's still moving down and then comes back up again to the same level, to our supply zone. And what happens next? When the price touched that level and it dropped back down again as it did before. And thanks to today's strategy, we will learn how to find those levels and how to find places where we can enter a deal and get our money with the same scenario of dropping the price or price jumping up. Let's talk about how to draw demand and supply zones correctly. In this case, we see that the price was moving quite steadily, and reaching certain level, we see price shooting up. And that basically means that we need to find demand zone. And the way I do this is I find the period of sudden growth. Usually it's a group of momentum candlesticks of the same color, and they are showing the sudden growth. So for example, this 4 candlesticks right here. And then we need to find the previous candlestick of the opposite color. In this case is this red candlestick. We are marking this zone, and this zone is the demand zone for us on this chart. And when the price is steadily going down with the correction, it reaches that zone and shoots up again. Same rule goes to the supply zone, but vice versa. In this case, we see that the price reached the certain level and then suddenly and aggressively dropped, right? And we understand that this is the supply zone. So we are choosing the previous candlestick of the opposite color and marking this zone, which is going to be the supply zone for us. And of course, when the price reaches this zone again, it basically goes back down again. So when you are trading on demand and supply strategy, many of you face the problem where the price does not respect levels. And that is when you draw a zone, and of course you draw it according to all the rules, but then price reaches your level and completely ignores it. And of course breaks through it and moves in the same direction without any reaction. And this is because not all the zones that you draw are actually going to be valid. So now I want to tell you about 3 techniques that I use in order to be really confident in those zones that I choose. Okay, let's look at another example, Euro Australian dollar, and in this situation we see that the price was going down to a certain level until there was a big jump of the price. So this gives us the understanding that we're probably working with valid demand zone. First criteria, sudden jump of the price, growth basically. Second criteria that I look at, it is the break of structure. And if you're talking about uptrend, that means that the price broke through the previous price maximum. It happens right here on this line. And the third criteria that I look at, it is the value gap. So in simple words, let's look at this chart. The price is moving up and we have 3 candlesticks of the same color. And if the first candlestick and the third candlestick are not touching their tails, so let me show you this area. It is right here. This is the area of the value gap. That basically means that at that moment there was a large one-time infusion of money, which gives us the understanding that there is probably the big institutional trader who entered a deal here. So we found all 3 criteria that we need, and now we can finally draw our zone. So we're taking the previous candlestick of the opposite color and we are drawing the zone right here. And you can definitely see here that the price jumped up, then there was a correction, it was slowly moving down and it reached the level again and jumped up. And also you can look at this chart and see that it happened one more time until right here their supply zone was formed and the price moved down. Finally, let's talk about when we should enter a deal using this strategy. So in this case, we see the sudden drop of the price, which is criteria number 1. Let's mark this zone right here. And basically, we see that right here we have the break of structure, and this zone is the criteria number 2. And the third criteria, we have the fair value gap, right? So now we are waiting for the price to reach the level of supply zone, and we see that it happened right here. So the first touch, the first candlestick of our level is right here, and a lot of traders are actually entering deals right here the second the first candlestick reaches the level, which is a big mistake because the price can stay in this level for quite a long time. And if you enter a deal right now on binary options, you can lose your money because the price is still in the same zone. So basically, we are never entering deals the second the price entered the zone. We're waiting for one more confirmation, and in this case we're waiting for momentum candlestick of red color, which you can see right here. But this is a good candlestick, really big one, but it just left the zone. I'm waiting for another one, and that would be a great idea because right here you see the green candlestick and we would lose the money. But the next candlestick of the red color, which is Marabuza candlestick, which gives us the understanding that this pattern shows us that bears have big influence on the market, and we can enter our deal for the downtrend. By the way, if you want to know more about different patterns, in my course I have a specific cheat list with all the patterns that I use, and that's why I'm not going to talk about it in this video. But right here you see that the price is going down now. Okay guys, let's finally get to pocket option and let's try to find a couple of deals with this strategy. And as I told you before, with this strategy you cannot find as many entry points and you have to spend a lot of time wasting for that. But I'm gonna try to find at least 2 of them if I'm lucky. But let's start. And today I'm using $2,500, which is more or around 3.5% from my balance. And as I told you before, again, with this strategy, I use more aggressive risk management because usually I use around 1.5/2% of my balance. And of course, for us to work with this strategy, we need to get our charts ready, we need to analyze them and find the zones so that we can just skip through different charts and find the entry points. So first one is going to be this one, and we will start with this place, this zone, and this is of course the supply zone. And let's look at, do we have all the confirmations? We have the sudden price drop, we see the break of structure, and the third one is the true value gap, which is also present here. And looking at this chart, price can jump like quite fast right here. Maybe this is going to be the first entry point, but additionally for now we're gonna mark the demand level that is the closest to us. It's going to be right here, and I'm gonna mark it right here, and of course stretch it till the end of the chart. And as you can see, the demand level actually worked here twice, and right now the price is moving to the supply zone. So now I'm gonna skip through all of the charts that we have. I'm gonna analyze them, and of course I'm gonna look from time to time to the old charts that we worked with to find the entry point. I do not know how we got this lucky, but this is the first entry point for us for today. Let me explain the logic here. We see the sudden drop of the price, and at the same time we have the true value gap, and of course right here we have the break of structure. So even though this is not the most aggressive price drop that we want to see, we're still gonna work with it, and let's wait for it because we still have the momentum candlestick, and let's wait for 1.5 minutes and see if we got the money. Okay, great results. We are really lucky that we found this entry point so fast. the price is closed the way that we needed it. And by the way, it's still going to continue to go down, and I'm not going to do this, but sometimes in cases like that, I open the second deal for the downtrend because I see the potential here, and I think that the price is going to go somewhere at the level of the previous low, but we will still move on to the next one. And the first one that we looked at didn't really change. So let's continue trying to find another entry point. So let's look at this chart and talk about it. We're not entering deal here right now, even if the price is going to reach the level. I'm going to explain why. In this case, we see the demand zone, and the price, of course, jumped up, and we are marking the level, and we see that the previous highs, we are breaking through all of them, and we have break of structure here, right? And this is the valid zone of demand. Then the level worked once, then worked twice, and right now the price is going back for the third time. And at the same time, we see that we see the formation of the downtrend. So we're gonna place the trend line right here somewhere. And of course, this is the giving us the signal that quite soon the zone is not going to be valid anymore, and probably the price is going to move with the trend line, according to the trend line. And that's why we're not opening the deal for the uptrend. And by the way, guys, so this is the chart that we talked about, and it was the right thing that we decided not to use this one because the price went to that level, it bounced up, and a lot of traders would enter a deal right there, but unfortunately the price is moving according to the new trend line, and that was a good choice for us not to use it. Guys, let's try to look at this currency pair because this one is quite interesting. We see the demand zone, we see the value gap, and of course the break of structure. So let's try to wait. The price reached the zone, and we are waiting for the confirmation for us to enter a deal, or we're just gonna move on. Alrighty, we are entering the deal for the uptrend because we see the momentum candlestick, and we will see what's going to happen in 2 minutes after our deal is closed. Amazing! So the second deal is also closed in black, and to be honest, it's not a lot of possibilities to enter a deal on the market today, and I think this is going to be the end for us for today. I'm going to quickly look at what we have at this moment, and right here we have breakthrough from the level. And by the way, if the price is moving quite aggressively through the level, I do not recommend you to enter a deal or the transaction, because sometimes the price is just going to ignore the level. It still went back, but it was quite much later than it's supposed to be, so be really careful in cases like that. But in general, let me see. Yeah, unfortunately, there's nothing else left, and that was still a great trading session for today. As I told you, I will try to find 2 deals because it's quite hard to find places where you can enter the transaction, but it's one of the best deals ever. So guys, today we talked about one of my favorite strategies, and if you have any questions left, do not hesitate and leave them in the comment section under this video, or you can text me on my Telegram. Speaking of which, you can also get your free course if you text me on my Telegram, link to which is going to be in the description box down below. And by the way, speaking of today's video, in order to trade more effectively with this specific strategy, it is really important to understand price action. So click right here and watch my video in which I talked about other key levels. And that's going to be it for us for today. Thank you so much for watching. Don't forget to subscribe to this channel, and I will see you in the next video. Bye bye.